If you're a retail investor in the Indian stock market, you're going to want to listen up because 2026 is a year you need to start preparing for, like, right now. The entire rulebook is getting a total rewrite, and it's going to affect everything from how your profits are taxed to the very tools you use to trade. A massive shift is coming, and we're here to break it all down for you.
Take a look at this number, 1.05 lakh crore rupees. I mean, just let that sink in for a second. According to CB, that's the net loss individual traders faced in the futures and options market in just a single financial year. And look, this isn't just some random statistic, it's the core reason why regulators are stepping in. They want to build a safer, more transparent market. The stakes are incredibly high.
So, to make sense of all this, we've broken it down into 4 key parts. First, we'll talk about the playing field and the person with the whistle. Then, we'll get into the nitty-gritty of the new tax rules you need to know. After that, we'll unpack the new regulations for all the automated trading out there. And finally, we'll tie it all together into a solid game plan.
All right, let's dive right into Section 1, the arena and the referee. Before we can even start talking about the new rules, we've got to be crystal clear on who's making them and where this game is actually being played. Okay, first up, SEBI. You can pretty much think of them as the market's referee. Their whole job, their entire reason for existing, is to protect your interests as an investor. They set the rules, they enforce them, and they make sure the playing field is level for everybody. Now, let's talk about the arenas, the NSE and the BSE. They might seem kind of similar, but they're really built for different things. The BSE is the OG, Asia's oldest exchange. It has a massive universe of over 5,500 companies, which makes it a fantastic hunting ground for those little-known, small-cap gems. The NSE, though, is the newer tech-driven powerhouse. It completely owns high-volume trading, especially when it comes to derivatives. And man, when we talk about dominance, just look at this. The NSE commands a whopping 80% of the entire equity derivative market. So why does that matter to you? It's all about one word, liquidity. This massive volume means you can get in and out of trades super fast without messing with the price. That's exactly why it's the go-to arena for almost every F&O trader out there. Okay, let's switch gears and move on to Section 2. You're going to want to pay close attention here because we're talking about your new tax playbook. This is probably one of the biggest changes, and it directly hits your bottom line, how much profit you actually get to take home. All right, here it is. This is the new magic number you need to burn into your brain, 12.5%. Starting in the 2026-27 financial year, this is going to be the new, uniform, long-term capital gains tax rate for most things. It's a huge move, probably aimed at simplifying what was, let's be honest, a super complicated tax code.
But wait, it's not all about the new rate. There's also a pretty important exemption to remember. Your first 1.25 lakh rupees in long-term gains from stocks and equity funds is completely tax-free, every single year. You only start paying that 12.5% on profits above this limit. So the math itself is getting a lot more straightforward. You take what you sold it for, subtract what you paid for it, and that's your gain. Simple. But here's the kicker, and this is absolutely crucial. For most assets, the indexation benefit is now gone. You know that thing that let you adjust your purchase price for inflation to lower your taxes? Yeah, that's being taken away.
This table makes the change really, really clear. Just look at things like debt funds, property, or gold. They used to be taxed at 20% with that inflation adjustment. Now they'll be taxed at a lower 12.5%, but without it. This is a massive strategic shift that you absolutely have to factor into your long-term investment plans.
Okay, on to Section 3, and this is where things get really futuristic. The rise of the robo-traders. Technology is changing the game, and now SEBI is stepping in with a whole new framework to regulate automated trading, especially for retail folks like us. So what in the world is ALgo Trading? Well, don't let the name scare you. It's actually pretty simple. It's just using a computer program to place your trades for you, automatically, based on a set of rules. So instead of you frantically clicking the buy button, the software does it for you the instant your specific conditions are met.
And listen, this isn't some distant future thing. It is happening as we speak. The process is already underway. But the big, hard deadline is April 1st, 2026. After that date, every single broker and every single algo product has to be compliant. No excuses, no exceptions. Now, this is a really important distinction SEBI is making. They're splitting algos into 2 camps, white box and black box. A white box is transparent. You know the logic, like a simple moving average crossover. But a black box, that's where the logic is a secret, a proprietary formula. And these now have much, much stricter rules. The provider must have a SEBI research analyst license to even offer it. So, this all leads to some critical questions you need to start asking, like today. If you're using any kind of third-party service, the first and most basic question is, are they actually registered with the NSE or BSE as an approved provider?
Second, you've got to demand some clarity. You need to ask them point blank, is the strategy you're selling me a transparent white box, or is its logic hidden away in a black box? You have every right to know what you're actually paying for.
And finally, the most important question of all. If it is a black box, ask for proof. Show me your SEBI research analyst license. Seriously, this is non-negotiable under the new rules. If they don't have it, or they get cagey about showing it to you, that's a giant red flag. You should probably run, not walk, away from that service.
Which brings us to our final section, how to actually play the game. Let's pull all of these new rules together into a clear, actionable strategy that you can use for 2026 and well beyond. So here's your playbook, your cheat sheet. For high-volume stuff like derivatives, you need to use the NSE. That deep liquidity is your best friend. For finding those potential hidden gems, though, go digging through the BSE's massive list of over 5,500 stocks. Next, that new 12.5% tax has to be part of every single profit calculation you make. And finally, if you're using any kind of algo, you have homework to do. Vet your provider, demand proof that they are exchange approved and fully SEBI compliant.
Look, the market is evolving, the rules are changing, and the entire playing field is being reset. These changes are bringing new challenges, for sure, but they're also bringing brand new opportunities. So the only real question left is this. Now that you know the new rules of the game, how are you going to adapt your strategy to win?